Hi everyone, this is Rob Roy. We just finished the live U.S. market update over on the Hub Financial channel. You're watching the recording here on the EWO channel, but if you'd like to see this live, go to the Hub Financial channel, register, and you'll be notified immediately when one of these videos is posted. In today's U.S. market update, we talked about, obviously, the big news was the Fed meeting, talked about some earnings, did a little bit of a chatter on the bond market, and talked about stocks of interest, especially Apple that reported earnings last night. Remember that when you're watching this recording, if there's a specific stock that you're interested in, you can go right to it looking at the chapters feature down at the bottom. So look forward to talking to you again soon. Enjoy the recording and have a great weekend. Take care, everybody. Hi, everyone. Welcome to this week's U.S. market update. And taking a look at the chart, you can see we did have a bit of a bounce back today after a couple down days, gap up, which I'm not super excited about. We still have those zigzag patterns that we've shown. I invite you to go back and look at past recordings to see those. There's 3 of them that all give us targets up around 424. And when we take a look at the main chart, I think one of the things to look at now, I know some of you live people make comments on where I draw my trend lines on these triangles. They don't have to be exact. In general terms, you can see we have a large ascending triangle in the market. Which way are we going to go? So we take a look at the moving averages, and you can see we did break back above that 10-day moving average today, which is important from a short-term standpoint. But if I take all these lines off so you can see the chart just a bit easier, you'll note that we still haven't taken out the high that occurred back on the 3rd. Now, Tuesday night, when we did Tuesday night's TradeFinder, and by the way, we do TradeFinder every Tuesday night at 9 p.m. Eastern time. Love for you to join us. You can sign up here, go to our website, evotrader.com. We talk the markets, we look for trade ideas, and we have a live Q&A. And we featured in this week's TradeFinder what to expect with Wednesday's Fed announcement. Obviously, that was going to be a big one. I felt like it would be a wild afternoon. There was a lot of whipsaws following that, but not as dramatic as I thought there might be because of speculation. Are they going to go to 25 basis points? Are they going to pause? Are they going to do 25 basis points and then say they're going to pause? What was going to happen coming out of those that Fed meeting? And, in the end, they raised 25 basis points. The commentary afterwards got just as much movement back and forth as it did during the actual announcement. And then during Chairman Powell's comments, the market kind of moved to the downside. And then, as you can see, we finished near the lows of the day. So that's the summary of the Fed announcement. In the end, it wasn't much of a surprise. I just thought there'd be a little more wild swings, but if you had an intraday chart, you thought, because it would swing up and then swing back down, I just thought that the swings would be a little bit larger than they actually came out to be. So that's what happened with the Fed meeting. And when you take a look at where we are, it's just that large triangle. And are we going to break above that? This gap above 410 ducks that we've talked about here. So we've got this break here right at 410. And could we move above that level, or are we going to stay below it? We need another follow through day because we did break below it. Getting back above it, we need a follow through day to see where we go from here. All right, moving over to interest rates. Let's take a look and see if the bond market is giving us any sort of a cue. And when you see we held 34, how many times have we talked about this over the last several weeks? And if you've been watching our recordings, and hopefully you have, been talking about, to me, just my opinion, the sweet spot for rates is staying in this range between 34 and 40 on the TNX. If we break below that, I think the market can handle it. If we drift lower, but a significant break and a big move to the downside, I think would be problematic. After the Fed meeting, talking about interest rates, Jeffrey Gundlach was on the financial networks. He's one of the few people that get me to turn my TV off of mute and actually listen when he talks. He's known as the bond king. I think his prowess is stronger in the bond market than the equities market, but bonds are extremely important to the equities market. I've always said that if you want to be a good equities trader, you have at least have a working knowledge of the bond market, and who better to listen to than the bond king. So that's why I'll turn the volume on and listen to what he has to say. He wasn't very constructive on equities, but let's stick to his comments on the bond market. And I was a bit surprised. I've been talking about how I did feel that there would be a Fed rate cut by the end of the year. He's talking about 75 basis points of rate cuts by the end of the year. I don't know about that, but again, I'm not going to argue with Jeffrey Gundlach. If you look at the Fed fund futures, they are pricing in a 75% chance of the first rate cut being in September. So if that's true, and when you get to a 75% level, you get to 75 or 80%, the Fed fund futures has a pretty amazing record of predicting what's going to happen. So if we start in September, he may be right. Perhaps there's 75 basis points before the end of the year. I think it's all going to matter about where the economic data comes in. Do we go into recession? How significant is the recession? The interesting thing about Powell and his comments afterwards, and has been echoed through all the Fed governors, is not one of them is talking about a Fed rate cut. And they had to ask Powell 3 times in his post-conference interview to finally answer the question of, do you see a Fed rate cut? 3 different people asked it. He skirted it. The 3rd time he finally said, no, we don't see rate cuts by the end of the year. Jeffrey Gundlach disagrees, much stronger than, and who cares what my viewpoint is. I felt like there was going to be one by the end of the year. He's talking 75 basis points. So we'll see. My point here is when we look at this chart, you can see we're in a wave 5 to the downside on the TNX. If we do break down below that 34 level and start to move down towards this wave 5 level, that would coincide, I think, with multiple Fed rate cuts. That's likely what's playing into the fact that the market didn't completely move to the downside following this. And a lot of people, a lot of comments on why is the market staying to the upside. We even had that in last night's insiders meeting, which we do every Thursday night for our alert subscribers at evotrader.com. We do an extended Q&A there, and they were asking, why is the market not moving further to the downside with everything that's going on? And my point is, the market always looks 6 to 9 months ahead. So we're in that area. We're in May. So by the end of the year is within the 6 to 9 months. I think the market is looking ahead to rate cuts. Now, the question will be, what happens when they actually do start cutting rates? Is that a signal? Can you imagine? September historically is the 2nd worst month of the year. Historically, May is the worst, and September is number 2. So if they start cutting rates, then will it be a buy the rumor, sell the news? Pretty interesting stuff there. Looking at the dollar, you can see that we've moved lower here. And Jeffrey Gundlach actually said he felt like the dollar would break this area of support that's been holding. He thinks the dollar breaks 101 and heads down towards that wave 5 low. Will he be right? It's being pretty stubborn holding here. If we get a drift lower in the dollar and we get a drift lower in rates, there's 2 things that could spur a market rally, at least until the Fed actually does start cutting rates. So is there a summer rally in the forecast? You know, there's 3 different zigzag patterns to the upside, as I talked about earlier. So all that could play out. And we'll see how that all works out in the end. So taking a look at the DIA, we've been having trouble at the 340 level. On the Dow, and even with today's move, a little bit of gap up there, which doesn't happen very often on the DIA, as you can see. We get it a little more often on the SPY than we do on the DIA, but we've got a not nearly as well formed, but still a pretty large ascending triangle on the DIA. Does this mean we're going to break to the upside? Or remind everybody that just because it's an ascending triangle does not guarantee an upside breakout. No 5-wave pattern here, which makes sense when you have corrective patterns such as triangles setting up. So we'll see if we can break above 340 next week. That's what the Dow, especially the DIA, desperately needs to do to move forward. Taking a look at the Qs, So we take a look at the Qs here, and as you would have suspected, move to the upside, especially on the back of the tech earnings reports. We'll talk more about that later on. And you can see we're back above 320. That was key because we had broken below 320. And I mentioned that both in TradeFinder Tuesday night, as well as last night's insiders, that we needed to get back above 320 on the Qs. And if we're looking towards rate cuts now, if the Fed is done, if they're on pause and the next move is going to be a cut, you would think that would have to be bullish for the Qs. And they also have, you guessed it, even though they're in a 5-wave impulse pattern, the only of the 3 major ones we've looked at that is also a large ascending triangle. So you have a 5-wave pattern and a large ascending triangle. But if you listen to what Elliott actually wrote, Ralph Nelson Elliott, when you see triangles, that trumps everything. So yes, there's a 5-wave qualified pattern, but if you're going to follow along with the triangle, you have to respect the fact that it could break either direction. Looking at the IWM, when we take a look there, you can see that that is not following suit as far as the ascending triangle. Big gap up today, though, so tells you it was a risk-on day today, and that was clear by how the market finished the day. There is a triangle, though. It's just a descending triangle on the IWM, not an ascending triangle. So major triangles all over the place. So what does that mean? We're going to have some sort of a significant move in the markets. I'm curious as to what you think. Where do you think this move's going to be? It's going to be big. All these triangles are large triangles. So we're going to get a significant move one way or the other. So leave a comment, whether you're watching live now or you're watching the recording, leave a comment on whether or not you think these breakouts of these triangles is going to be to the upside or the downside. I'm really curious as to what everybody has to say. So let's take a look at the VIX and see what that's telling us. And we went back up and tested 20. So here we are right back up to the 20 level and turned it back. So we closed dead on it yesterday, and that was a signal for the VIX to move down. So if you are bearish, again, you're holding your hat. Oh, that's terrible. On the fact that the VIX is so low, and the more likelihood is that the VIX moves to the upside versus the downside. Just a reminder, in the past, the VIX has gone down to 16 and 12, and even in the last few years has broken below 10, but just for a brief amount of time. Nonetheless, the VIX is in the lower area, which would seem to imply that a likelihood of a move higher in the VIX is a higher probability than a move lower, but it could. And perhaps the fact that the Fed's done with I'm assuming they're done with rate hikes. They haven't said that, but I'm assuming that perhaps we do get just a slow drift down in the VIX. So imagine if we got a slow drift down in rates, we get a slow drift down in the dollar, and we get a slow drift down on the VIX. All those things you would think could be catalysts for a breakout of the triangle to the upside. So there's a little bit for everybody here in this report, and that pretty much sums things up on the markets. Ducks. I've talked numerous times, and Apple is on a very short list of stocks that I say is I'm never going to short Apple. I don't care what the pattern looks like, etc. They have so much cash, and again, they did it this time. There was a lot of commentary, and maybe, from a contrarian standpoint, that could have tipped the hand that Apple was going to once again beat earnings and surprise everybody. I had never heard so many of the media talking heads saying that Apple was going to miss. This was going to be the quarter that they missed. Nope, not so fast. They came through. Big gap up, which is a concern if you're long Apple. But they did beat earnings, and they announced another massive buyback. So yeah, you short Apple at your own peril, Ducks. I couldn't agree more. But as far as where we go from here, look at that wave 5. It's exactly at 100% extension, with roughly a 50% wave 4, which is where you would think it would go. We're a little bit overbought from the 10-day moving average, and the gap up I don't like. I'm concerned about that. Do we come back down and fill that gap at the beginning of next week or sometime through next week? So I'd be cautious at these levels. It looks like Apple's getting a little bit top heavy, but it was amazing how And as I said, from a contrarian standpoint, when all the talking heads were saying they're going to miss, look where we were. So you can see this range. We've talked about it for the last few weeks, the range between 280 and 260. And my commentary has remained the same, even though we are in a wave 3. There's the potential of that wave 4 starting at some point. For those of you that are newer, talking about the software, and Doug's talked about, we're using the Hub software here at hub.com. It's called Profit Source. This does not mean the wave 4 is underway. What this means that if the wave 4 begins, because the current wave is 3, that's why it's in the green color. If the wave 4 were to begin, that's an area of potential support. But as the stock continues in its wave 3, the projections will adjust. But looking at the trading range, we tried to break out. And so Tuesday night during TradeFinder, we had broken to the upside, but no follow-through day. And that's another one of my rules is you have to have a follow-through day, confirmation day. If you break a major point of support resistance, break out of moving averages, whatever, you have to have the follow-through day. We didn't have it, but could that have been, that was the question we posed Tuesday night to the viewers of TradeFinder, is could that have just been a test? We broke above 280 and come back down, because my commentary has been, you break above 280, you go long. You break below 260, you go short. Earnings are coming up. Earnings are on the horizon. And you'll be able to see, there you go. There's the earnings report. Do you want to get in front of that right now? Well, last night I was thinking maybe we're going to go back, because we turned around and came right back down into that trading range. And maybe we're just going to go sideways there before the earnings report. But Nvidia said, not so fast today. And we broke back above 280. But I submit again, we need a follow-through day. Perhaps there is an upward run into earnings. So watch what Nvidia does on Monday. Are we setting up for another higher close on Monday? If so, then that's a breakout with confirmation. And I think you could probably see a run up in Nvidia into that earnings report. But trying to break out of this trading range between 260 and 280 that we've been in for so long. Another one of the beloved stocks. I don't quite feel as much on never short Tesla as I do. We've actually had some downside trades in these Elliott wave patterns on Tesla, but it is certainly a love stock. And so those that love the stock are pretty happy with the move to the upside today. Now, we had moved lower. We created this wave 4. We're in a 5-wave pattern to the upside. So the Tesla bulls will be happy with that. And the fact that we held this important level at 160 and this wave 4 at 61.8% fib level, which to me is the strongest level. But the news that you talked about is we had this move down on the fact that Tesla cut prices in the US. Come to find out today, they're raising prices in China. So they're cutting them here on the back of Ford, GM, and some of the other EV makers cutting prices. They felt like they needed to do that to compete. And so that gave us this big move lower. And now they're going to, I'm never going to second guess anything from Elon Musk, but China's in this whole protectionist thing, and they've got NEO and some other things going on over there. Is that really a great idea? The market liked it. Of course, we did have a big up day today. So when you look at this with this break up, that's a pretty solid break to the upside there. And you would have to think that Tesla is probably looking at coming up to 180. That will now be resistance. That was the support level for a while. That will be resistance, and see if we come up, fill this gap right here, and then come test this 180 level, and that'll give us the key. If we can break above 180, then I think we're probably off heading up towards that wave 5, but we have to get there first. So I think you kind of sit on your hands right now on Tesla. I know that's not what everybody wants to hear. It is a little bit more conservative. You could be aggressive if you have an aggressive mind. Everybody has their own risk tolerances to go ahead and make a short-term trade up to 180, because I do think that's highly likely. If you want to be a bit more conservative, let Tesla get back above 180. You've got plenty of room if that wave 5 comes to fruition to see where we go. But yeah, some interesting news about Tesla today. We nailed this at evotrader.com. We had a strangle on it going all the way back here. And right before earnings, we actually moved to where, strangle is an out of the money call and an out of the money put. and we were able to take off the call on the day of earnings or reported after hours. So there's a lot of IV pumped in. We took the call off, guaranteed a 40% gain in the position. We feature things like that during TradeFinder as well, by the way. And we left the put as a lottery ticket. That's not going to pay off, as most lottery tickets don't, but it was there because there wasn't much value in it. But just taking the call off locked in a minimum 40% gain. We ended up with about 42% on it. We do have a little bit of a triangle here on Amazon around this 105 area. So triangle here, breakout, formed another one. It's come up. I think this is key, and filled that gap. That's another one of the things. Gaps get filled. Our AI data says 94% of gaps get filled. That's a pretty high number. The question is, when? Look how long it took. See, sometimes gaps get filled immediately, sometimes it takes a while. We could get a little bit of a breakout next week or so on Amazon. I'm also in the area of kind of like Tesla, sit on your hands here, maybe even with Nvidia too, trading range. I certainly wouldn't want to short Amazon unless it broke below 100. There's some support there, and it happens to be the breakout point of this larger triangle at the end of March. But I wouldn't really want to go long either without a break above 110. So I think we're kind of, it's hard to say which way we're going to go from here, but that's my view. Short below 100, long below, above 110. This is really interesting on the chart of Bitcoin. You're right, it hasn't done anything, but check this out. So we had this little triangle here, which we featured, several weeks ago, and we got the vertical breakout, and I don't like that. And so we came right back down. The only question there was, are we going to come down and, because this was a vertical move too, and give back some of that? We didn't. All we did was come back to the point of the breakout, which is classic Elliott wave corrective triangle mode. But look what's happened. Talk about going nowhere. As you said, we formed another triangle. So I think a little bit of caution maybe here on Bitcoin. It does look like it's going to make another move. Is it going to be another one of those vertical moves? Triangle just barely above where the last one was, though. So if you really want to talk about Bitcoin, hasn't done much since the middle of March. So massive consolidation here of this vertical move. But I look for Bitcoin to make a direction. Remember, you don't know which way. Triangles trump everything, and that wave 5 is pretty extended at 125% extension, but we'll be watching Bitcoin pretty close next week to see which direction this breakout occurs. And as you said, the exchange Coinbase, which has been facing a lot of regulatory headlines, etc., came out with surprising news on their earnings and bounced to the upside, holding this level at 50, which was a bit of support, not massive, but a bit of support. But that was key, because if it didn't do that, you were probably looking at Coinbase all the way back down here at that wave 5 low from January in the low 30s range. But it didn't do it. It held, it gapped up. Really pretty surprising here. I think you still have to keep in mind, though, see, we're above the 10-day moving average. We haven't broken above the 50-day. The fact that there's that gap. Do we have to come fill that gap before we can break above the 50-day moving average? But as we've highlighted, gaps don't always get filled immediately. I think all of a sudden I was kind of stay away from Coinbase because of all the regulatory news. You don't ever know what the government's going to come out and say, but it seems to be shaking it off, and that move down to 50 held. I think you could go long Coinbase, but not unless it gets above 60 and back above the 50-day moving average. If it does that, you have to respect what the charts are showing, in my opinion, and then you can you take a long shot at Coinbase. That one's really surprising to me. With all that's been going on, I think it surprised a lot of people, clearly, by that gap to the upside there. These are my search results. So this is my own custom search. And by the way, if you're a ewotrader.com subscriber and you have a Profit Source, you get my actual searches. And there's the result. Look at it. Pretty much every home builder is listed on there. So when you see something like that, where they're all on there, that was amazing to me. Instead of trying to pick one, which one do you pick? They're all in a bullish impulse pattern. Let's just look at the ETF, which is the XHB. And so here we are moving to the upside with the ETF. And the only issue here is we got turned back as we approached that wave 5 high. And there's a pretty decent triangle here too. So the home builders are also in an ascending triangle, just like the S&P, the DIA, and the Qs. Are we going to get an upside breakout in the home builders? That would really be mind-boggling to me. Maybe because the next move of the Fed is likely rate cuts. That could buoy another run in the home builders. This is one that's confounded me. I've stayed away from it because I've been consistently wrong on it. But hey, the charts speak for themselves, and watch for that. If you can see the XHB break above 72 with follow through, I think that tells you there's another leg higher in the home builders. Plus the fact that you can see all of them showing up on my search results. That's blown me away this week, Dux.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.